Taiwan, which is clocking in the biggest gains. It's up 1.3%.
It looks like the House will go the way of the Republicans. That means gridlock, probably less fiscal spending will be achieved.
We had a good top-line growth, the highest ever top-line of 534 crores.
Margins expanded 200 basis points to at 24%, and profits were also up 46% for the company, up almost 75 points, so 18,276.
Optimism is at very strong, and we are almost as an index level, we are almost near the 52-week high.
The total burn on the new initiatives going forward will be under 200 crores a year.
The good news was their dividend that they've announced, close to around 15 rupees. Street was baking in good dividend for the year, but not so soon.
The gross margins declined by about 200 basis points, but that was understandable because of the cheese and vegetable inflation, etc.
Today, the Indian markets are pretty much flat.
The margins have fallen 230 basis points for MRF.
May lead to an increase of almost 25 to 40% in rises as far as the end customer usage is concerned.
For the markets, we have the Bank Nifty, which is outperforming with gains of 0.3%.
Well, that was the day so far. You're with us here on a fresh new edition of Closing Bell. I'm Prashant. With me, my colleague Reema and Nigel, and my colleague Anuj also, of course, is in the studios. Guys, hi. Good afternoon. I mean, I think all of us are waiting for just one thing, isn't it? Which is that last hour of pop, which is basically what has happened the last two sessions. Will that happen or not, I think, is the real question which we need to just wait and watch. Which way the direction, of course, has been higher. I think we just need to see if it appears this time and what will lead it. Last two sessions has been Reliance and a bit of help from PSU banks as well. Otherwise, I mean, I think broadly speaking, the high and the low today become, markers. So 18,296 on the high side and 18,166 on the lower side. So, I mean, you basically, and it's been a very, very ranged session, like the two days, only to see action in the last hour. And beyond that, I think there is, of course, I mean, a lot of the action which we are seeing in the broader markets. I must say, as we wind down the earnings season, one is starting to get the feeling, and we are yet to compile the numbers, but there are more earnings downgrades than upgrades. I mean, you just take today's today's day as an example. So many more stocks are sharply lower on the back of earnings disappointments and earnings downgrades as compared to, say, a PI, which is kind of a one-off, which is higher on the back of very strong earnings. But as I said, I mean, it's unfair to make a sweeping judgment. We'll have to compile the numbers to see how earnings expectations have really moved. Out of the US, of course, we'll get the midterm election results. But I think the bigger cue really is the inflation number, which is only tomorrow. So we'll have to wait and watch for that. Anuj, what are you watching out for?
Well, Prashant, I'll just revisit that graph that I mentioned in the morning, because for me, that really is the most important one. What happens in the US tonight? Because this is that falling trend line from where the market in the last 2 or 3 times have had a very steep fall. And that's why, if you see that, that graph would come up for you. The Dow Jones is absolutely at that trend line, at the channel, that falling trend line. It's absolutely at that point. But anyway, as you said, Prashant, the pattern is same. Gap up, that gets sold into, and then the market starts to make a move. In fact, the move has now started to, get even preempted. Earlier, it used to start at 230, then 250, and this time it even started before 2 p.m. But let's see how the US market will react to the election outcome. On the Nifty, today's action suggests that there's some resistance clearly at 18,300. But if we close above 18,250, that will technically make market very bullish after the intraday decline. So let's see if we close above 18,250. And on the downside, of course, you need to keep an eye on 18,050. On the Bank Nifty, that's made a new all-time high. And that is really something which is, clearly telling you that it's prepared for life above 42,000. Maybe even make a move towards 45 or 46,000 going forward, because it's really been the strongest index. 42,000 is a small hurdle. I see absolutely no call writing on the Bank Nifty. So that could be your index to perhaps keep taking the markets higher. Reema, back to you.
Hi, Anuj. Hi, Prashant. In fact, just pull up the Nifty banking index and you would see in the last 1 hour, there's been significant buying coming through in the Nifty banking index as it powers away to about a 0.5% up move. But quickly to run you through some of the big movers on the way up and on the way down. On the losing side, Hindalco is struggling after Novelis gave a weaker outlook for the second half of the year on cost inflation. So therefore, the EBITDA performance could be a bit weaker. Divi's Laboratories has now lost 12% after it reported a miss on Monday on the back of multi-quarter low margins. So Divi's Laboratory continues to sulk. IT is weak in trade, so Tech Mahindra is, nearly 45% away from its all-time high level. So even as the benchmark indices are getting to those levels, IT continues to remain under pressure, and Eicher Motors too is a bit subdued in trade. On the gaining side, it's the Adani Group stocks, Adani Ports, Adani Enterprises seeing buying, Coal India, ITC amongst the stocks which are now trading at their 52-week highs, Nigel.
Well, guys, it appears the Indian markets, well, they pause for breath today. After the kind of run that we have seen, the Nifty Bank, well, it went ahead and made fresh all-time highs. The problem is we're not seeing follow-through even out there. But we'll keep an eye on the Nifty Bank and Reliance Industries. Can it be 3 out of 3 sessions? Remember, the last couple of trading sessions, Reliance Industries has been the big mover that's helped the Nifty end virtually at the high point of the day. And in the last 10-15 minutes or so, the intraday chart of Reliance Industries is telling you that maybe, in fact, there is some buying that's come back in there. So keep an eye on that one. The problem for the Nifty is 18,200, 18,300. Remember, we have, a weekly expiry that will play out tomorrow. So 18,300 call and 18,200 call. You see the total open interest built up out there. It's close to around 1.4 crore shares. That's telling you the kind of writing that was seen at that level. So that appears like a congestion zone. There'll be a bigger effort that will be required to get past that 18,350. The bears will look to defend that mark. Let's see whether or not the bulls have it in them, maybe to take us past that in the next couple of trading sessions. Keep an eye out on Reliance Industries and the Nifty Bank. Rima?
Okay, and let's now get to telling our viewers what we've lined up for them on the show today. The stock picks lined up. The stocks are picked up from the day's low, but the Nifty is trading flat. Above 18,200. It's a down day for mid-caps. The rally continues for banks. Pharma stocks drag while IT, FMCG trade flat. A couple of stocks under pressure on the back of weak earnings. Ramco slides and Godrej Properties weak. A detailed fine print on those numbers coming up on the show. And it's a margin trigger for tyre stocks like MRF and SEAT. One slides while the other one gains a deep dive into the tyre story on closing bell today. And in key earnings, we'll tell you what to expect from Tata Motors and Lupin. Numbers expected later. And our alpha manager for the day, Sanjay Parekh of Soham Asset Managers, will join in to discuss his top portfolio bets, his view on the markets, the road ahead. All this and more lined up in the final 60 minutes of trade.
Okay, what should you be doing in the last hour of trade? Mitesh is back with us with some thoughts. Mitesh, it's quiet still, past the 230 mark. One's not sure whether what's happened last 2 days will repeat again. But what would you want to do in terms of taking positions now?
So, Prashant, I think, today is slightly different. One, I think the hourly indicators have, not shown the strength of continuation, though I suspect till 18,100 gets taken out, the structure will not weaken, and I think we'll see a downward move in the indicators only below 18,100. So that becomes a trading stop loss. But I think I would be slightly light on the markets given the fact that from overbought levels and trading around the trend line level, we are not showing strength or follow through immediately. So it's always good and then wait for that breakout to happen when you can be more aggressive on the upside. So for the time being, trading with a mild, positive bias, but slightly on the lighter side, I have a buy. I have a buy on a sell on Jubilant Foods with a stop at about 580 for targets of roughly around 550 to begin with. But I suspect eventually 535, 530 could be the range where the stock could get down and settle. And the other one, the other stock which I like is IDFC Limited. That's a buy with a stop at about levels of 79.5 for targets of 85.
Okay, all right, got that, Mitesh. Well, Prakash Diwan as well joins us on the show. Prakash, I wanted to ask you about some of these result reactions, but first let's talk about the key stock that is reacting in the last 1 hour or so, Ramco Cements. That's moved to the low point of the day. It's a top-down miss, actually, that we're seeing out there. Though on the top line, it's fairly okay. Now, the margins, that was missed because of higher cost, and the company could not pass on some of that higher cost. That's what they've admitted in their press release as well. On the top line, though, well, you have the volumes number that is better. It's come at around 3.3 million tons, which compares with around 3.1 million tons. They've also gone on to state that the premium products, as a percentage of their total sales volumes, well, that's gone up and it stood at around 24% for the first half of the year. So that explains why a bit of a beat on the top line. Margins, though, they have come in lower, come in at around 10%. That compares with around 13% that we were working with. Higher costs. Power and fuel costs spiked up by close to around 133% on a year-on-year basis. Even on a sequential basis, it's up more than 25%. Similar is the case with transport and handling, up by around 16%. The other problem on the profitability front is that the finance cost has gone up. They've been expanding capacity. The debt in books has gone to around 4,700 crores or so. That makes things a little bit iffy on the company. And in addition to the miss on the operating front and also the higher finance costs, well, it trades at elevated valuations as well. So that explains why it's down 4.5%. Well, Prakash, that's about the numbers. How do you approach it from here on? Ramco Cement, we know things will recover, but to what extent and how much of it is in the price? Go ahead.
So, Nigel, very clearly, I think it's ill-timed. The miss on the numbers, particularly the profit numbers, is an unfortunate timing issue. The capacity expansion is happening at a time when the costs are loading up. Whereas some of the other names like Dalmia Bharat, which also mentioned that there were cost pressures, but low margins is probably a thing of the past. It's because they've already done the expansion, way back, and they're reaping the benefits of sitting on volume growth at a price elevated level, which is thanks to some of the previous price hikes, and you don't have the ability to take price hikes too frequently here. So, and Ramco's pocket of excellence, the South, is something where it's fairly competitive also. It's a market which does not see too much of dilution in the competitive intensity. So they will have to live with this situation. It probably doesn't offer great turnaround, potential in terms of, buying it at this stage. Still, the capacities have already come up, and possibly it's time with a little bit of a price recovery. So wait for that. But till then, you have, point for choice, actually. So that's the only problem with cement. In fact, India Cement might end up looking far better than Ramco at this point in time, given these matrices.
That's the view on Ramco Cements. Let's talk about Godrej Properties. That's under pressure on the back of a weak set of Q2 numbers. Sonal is here with the fine print.
Thanks a lot for that. Well, yes, it was a weak operational update coming in from Godrej Properties. Bookings declined both on a quarter-on-quarter and on a YOY basis. Volumes too were down 25% on a YOY basis, down 4% sequentially. Bookings were down 6% on a YOY basis, down 4% sequentially. But customer collections on the other side, they looked really good. So they went up by 39% on a YOY basis, and they were up 24% on a sequential basis as well. So that is a positive takeaway from the results this time around. In the first half, they've sold area around 5.5 million square feet, which is up 26%. Booking value has gone up by 60%, and collections have gone up by 44%. Now, if we look at the geographical breakup, this weakness has come in from the Mumbai market because of a high base. So quarter-on-quarter basis, Mumbai bookings have halved. They had two big launches in the quarter gone by, and that's why this decline. MMR region saw 565 crore rupees in terms of bookings, NCR at 852 crore rupees, which has increased. Pune and Bengaluru also saw an increase in terms of YOY bookings as well. Debt in the books of the company has increased. Absolute debt at 1365 crore rupees, which compares with 956 crore rupees on a quarter-on-quarter basis. However, the management maintains their FY23 bookings guidance at 10,000 crore rupees. They do have projects lined up in this year itself, and that is something they expect will aid earnings in the second half. But on the back of these numbers, today the stock is not doing so well.
Sonal, thank you very much for that. And I just want to put in context the performance of the other real estate, the Mumbai-based real estate companies when they reported their numbers. So Macrotech Developers, which is popularly known by Lodha, when they construct their properties, reported their best ever Q2 numbers in terms of sales booking. Their pre-sales were up 57% on year-on-year basis, up 12% on a quarter-on-quarter basis. The numbers were very strong. Oberoi Realty had reported numbers very early on in the earnings season around middle of October. Their pre-sales were at a three-quarter high. On a quarter-on-quarter basis, their pre-sales had gone up by more than 50%. So just in context, the other Mumbai-based real estate players have reported good numbers, but no such luck for Godrej Properties. Prakash, what did you make of the numbers from Godrej Properties, the details outlined by Sonal?
So, essentially, Godrej Properties is more of a pan-India player than Macrotech and Oberoi. So very clearly, while they're headquartered out of Mumbai, if you see the inventory that's building up, 60% of it is outside of Mumbai, at least in terms of units or square feet, not necessarily value. So definitely, the kind of stage at which they are, I think it's a bottoming out process that we've seen, and every real estate player goes through a very different cycle of land acquisition, development, and sales. Godrej has still continued to maintain that asset-light model thanks to so many of these promising JDAs that it has. That once you start seeing that conversion happen, it's going to be very quick for realizations to start building in. So it might get lumpy on the way up, But I think it's probably a stage at which if somebody were to buy in and sit patiently for 2 years, you would get amply rewarded then as compared to this. I love Oberoi's business model because it's very linear, very straightforward. We've spoken about it. It's done well, but Godrej offers a tremendous entry point at this point in time from a 2-year perspective for somebody who could probably look at a 50-60% CAGR also for this short period. So that's the upside, but it will test your patience, as Sonal explained. The turnaround is yet to be seen, and as and when that happens, it will probably be pleasant. But till then, it'll probably get a little bit of anxiety to be built up.
They are expecting things to pick up in the second half of the year. By the way, some of these PSU banks are moving up. Central Bank of India, pull that up. The stock is higher by close to about 12-13% in trade. Indian Bank is seeing a bit of buying come through in the last 10 minutes or so. Bank of India is again up another 9% in trade. IOB is higher in trade. You can see further buying coming through in a couple of these PSU banks. Get into a break. On the other side, our alpha manager for the day, Sanjay Parekh of Soham Asset Managers, will also join in. Welcome back. The other theme that we're focusing on are the tyre stocks, because we've seen diverse moves from some of these large players. MRF is under pressure, margin pressures kicking in for MRF. CEAT, on the other hand, appears to have bucked those inflationary concerns and reported a margin improvement. Sonia is here with a deep dive on the tyre story. Sonia.
Well, thanks a lot for that. So, just to start off, let me tell you that there's no problems with the top line. So, the revenue growth for MRF has been pretty solid this time. It's an 18% growth year on year. CEAT too has done well, and that's because of the pickup that we've seen in the OEM space. However, the problem really for MRF is in the margins, and it's very peculiar. CEAT is up 5% while MRF is down about 5 to 6% because CEAT has reported an improvement in margins quarter on quarter while MRF has seen a fall. So if you look at it, CEAT's gross margins have improved quarter on quarter to 32.5% compared to 31.7% last quarter, while the EBITDA margins have improved quarter on quarter to 7% versus 6.1% last quarter. In fact, for CEAT, for the last preceding 2 quarters, it was languishing between 6 to 6.5%, and there has been an improvement to 7% this time around. But that's not the case for MRF. MRF's EBITDA margins are down 30 basis points quarter on quarter and 230 basis points year on year, coming in at a multi-quarter low of 8.2% versus 10.5%. Now, if you look at an average, right, MRF has been in this 10 to 11% range for a while, but this time around it has slipped. So what are the reasons? It's difficult to gauge because for MRF, the management really doesn't come out and tell us what the model mix is and why their margins are under pressure. But for CEAT, the gross margins have improved because of the price hikes that CEAT undertook in Q2. And the price hikes that CEAT took was then followed by competition. So the assumption is that CEAT went ahead and passed on all the price hikes to consumers, while other players like MRF couldn't do that to the best of the requirement, and hence this diversion in margin performance. Back to you.
Maybe in the coming quarters they try and do that to offset the cost impact. Sonia, very interesting. Thank you very much for that. Completely opposite directions on both names. Before I go to Prakash and ask him about tire names, look at the market. It's basically, we've got a move, absolutely no doubt, the 230 move, but it's in the opposite direction as compared to what we've had in the last 2 sessions. We're down 76, 77 points, and almost all of it has come in post 230. So the tradition or the example continues, but today it's flipped. 18,126 is where we are at. And the bulk of the move, of course, a large move in the Nifty, but the Bank Nifty also, if you can have that up, has lost almost from 240, not even 230, which is basically the last 10 minutes, has lost about 200 points, 220 points. You can see that sharp slide on the Nifty bank as well. Maybe we can look at the Nifty, the PSU index as well, because that is where bulk of the gains were sitting. It doesn't have too much by way of weight, but yeah, I mean the PSU index has also come off, but nothing as compared to what the Bank Nifty is doing. So private banks, I think ICICI, HDFC, Kotak, etc., perhaps more of a culprit here. Prakash, quick thoughts on the tire names, MRF and CEAT. What do you like? Even with this kind of sort of reaction and earnings, etc., MRF trades at some 50-60% premium to CEAT. Your thoughts?
Yeah, so MRF has got the advantage of a very low float. Whoever owns it at such, the entry points are at such abysmally low levels that you really don't bother if it comes off a bit on the back of just one quarter. What's interesting for the space and what CEAT is signaling is the benign nature of the raw material cost, which is expected going forward, and overlap with the fact that demand is absolutely robust and still growing in spite of a bit of slowdown in Europe and all, which is a question mark. You actually are in a very sweet spot, and if you continue to deleverage the way CEAT and all have done, which is more of an internal thing for them and not just industry specific, everything kind of works very well, and operating leverage starts emerging strongly. So that's going to happen. That's going to happen for MRF as well. It's just a matter of the lag between what CEAT has done or demonstrated by virtue of a price hike, and the segments that it caters to are slightly different. Of course, it's not as premium as what MRF does. So that's the only thing. But I think it's a great opportunity for people to pad up if you have the gumption to buy which almost is a lakh of rupees per piece in the case of MRF. But otherwise, I think the sector as a whole is definitely looking quite promising from here on.
Okay, all right, Prakash. But let's focus on another stock, and we'll get Sonal in first to explain to us about these numbers. PI Industries, what a dream run it's had today. And Prakash, then I'll come across to you to get your comment. Sonal, run us through the analysis first.
Well, yes, strong set of numbers. It has beaten all parameters and it has come in on a high base, and that's why the excitement in the stock today. Revenue growth of 31%, EBITDA growth of 49%. Margins on the back of this have expanded 200 basis points to come in at 24%, and profits have also grown by 46% on a YOY basis. It was led by both the export market and the domestic market for the company. Export markets grew 29% on a high base, where volume growth came in at 25%. So there was a 4% pricing growth, 36% growth in the domestic markets, and volume growth came in at 31%. Newly launched brands by the company are something that aided to overall growth this time around. The management says that trend of rising input costs continued, and passing on these costs to the customers also continued in the first half. EBITDA margins improved because of a better product mix and also operating leverage. They continue to hold cash in their books close to 2,300 crore rupees, and they continue to look for opportunities as well in the inorganic arena, and that is something they continue to look out for. But overall, good set of numbers, and that is something that the street is liking today.
Okay, all right. Sonal, thanks a lot for that. By the way, we have a con call that's underway currently, and we'll try to get out further details with regard to that. Prakash, what do you make of these numbers? Expensive stock, numbers, blockbuster, the street likes it up 10%.
No, absolutely. Everything is as per script. You have to deliver these numbers if you are trading at 60 times trailing or, whatever. And the beauty is in today's, what the screen is telling us today, Nigel, is the volumes are almost already, it's just not even 3 o'clock, but it's 11 times of the last 1 week, 1 month, 2 week average, which means a lot of people who are waiting for these kind of numbers to happen have latched on to the stock. And then there could be some very major institutional buying that could emerge from here on. The call will, of course, also validate whether there is an expectation of this being a more deeply secular trend over the next few quarters, which looks like. So I think great pricing power is what they've demonstrated all these years, great ROCs, and a very, very well allocated capital on the balance sheet, debt equity ratios being hardly of any nature. So I think overall, it's definitely delivered. It should continue to deliver is my guess. But of course, we'll wait for more details, specifics on the call to take a more nuanced decision going forward.
All right, Prakash, thanks very much. So we'll sort of wait to hear And I think investors would be hearing to what the management is saying with that on that con call. Market still down about, 75 points. 18,127, 128 is where we are at. Sanjay Parekh is now joining us. He's founder and chief investment officer at Soham Asset Managers. Sanjay, great to have you with us here on the program. Thank you very much. I think first time for you on this show. So welcome from all of us. You know, I was looking at the fund fact sheet. You started at an interesting time, which is, I believe, earlier this year, May of this year, right?
Yes.
So, amidst all that flux, and as soon as you started, you had that large correction, which was, of course, an opportunity. So I just want to understand how are you positioned? You're sitting on about 8% of the fund in cash. You're overweight sectors like insurance. So just tell us what's your thinking now.
Yeah, no, thank you to the whole team. And this is a new avatar. I used to meet, interact when I was in the phone. So, we started at 16,266 in May 23rd. And of course, then the markets were volatile. They went up to almost to 17,000 and then back to 15,300. So we did have a view on markets, and the view was that, one would slowly, gradually accumulate. And the period from 16 to 15, we really used it well to deploy our cash. And most of it back at 16,500, we are deployed. So it did help our funds, in terms of we did participate in the whole rise. And, also we had an outperformance of around 3.5%. So that's the process we followed. But it is certainly important to have a view on Nifty, which is our benchmark. And that we did judiciously and also, of course, a little bit cautiously in terms of our entry price.
Okay. Hi, Sanjay. Good afternoon. Nigel on this side. Sanjay, I'm looking at where you've deployed money, and the largest allocation is obviously the banking and the financial space. But in there, you're mostly allocated to private sector banks, and the lone PSU name you've put in is SBI. Now, people are talking about this re-rating of sorts that we're seeing on these PSU banking names. They could be in for a good run even from here. That's at least what the screen is telling us. You wouldn't go down. You wouldn't go down the line. You don't think that some of those smaller PSU banks, that were trading at half times, 0.6, 0.7 times, even after such a big run, would you allocate money out there?
No, I think no, absolutely. There is a case to look at them. We participate through SBI. SBI is a very large weight for us at 5.3%. The rest of them also we reviewed, the Bank of Baroda, Canara Bank, and they've moved up for right reasons. I've been running the banking fund earlier in Nippon and ICICI as well, and I've never seen the banking balance sheet so good. And all of them are reasonably capitalized. The NPA are at all 10-year low, and now they're looking up on ROA and ROE. And the best part is, now you're seeing the discipline. So going ahead, I'm very hopeful that even the PSUs would, move up in terms of their ROA, ROE on the larger PSUs. The rest of them will all be bottom up, and, you really have to look at them, whether they have a right to win to get to that 0.91% ROA initially and then even further move up. So some of them you will have to look at as trades. But the larger PSUs, clearly there is a point to look at them.
Sanjay, afternoon. Rima here. Your IT weightage in the Opportunities Fund is about 10.5%. Just curious, what was it when you started off in May, 6 months ago? Has it come down? Has it gone up?
No, we were, as you said, we're cautiously deploying. Margin of safety is very important to us. The price value gap is important. We do look at absolute, though we cannot guarantee. And we were seeing the US situation quite chaotic. And, eventually it will impact the IT services demand. So there was a tailwind in terms of rupee dollar, but that came with a lag. But we took a conscious call to be underweight. That we still hold that. I think the world is going to be chaotic. It's not only US, even Europe, and it would have an impact in terms of the IT demand. There would be some tailwinds, but the headwinds in terms of dollar revenue growth, we believe, will certainly get affected. So that's why we were underweight on IT services, and we have leaders like Infosys in our portfolio, but we are underweight on IT, and we continue to remain that.
Okay, that's a sector where there is a lot of pain, but you don't want to step in there. Generally, Sanjay, we hear that we kind of hear the lament quite often that there are no real bargains in that sense. So it's kind of hard. But there are bargains if you believe IT will turn or anything. But you already told us you're not really very positive. I saw that you're overweight insurance as a sector. Is that still still hold true? Is that again? I mean, stocks have not done particularly well along with the rest of the market. What's the thesis there?
No. Yeah, Prashant, so you're right, they've not done well. And one good, I mean, as a strategy over years I have followed is sometimes, you see a underperformance, which is in the last 1.5 years at times, but if the structural story is right, they actually gives an opportunity. So, operationally, near term, we are seeing pure protection growth not being there. In pure protection, the margins are very high. So some of the larger names, they transited in terms of the product profile and yet managed VNB margins. In fact, accelerated it. But the clear APE growth, which is also very important for the overall value, which has to be contributed by pure protection, retail pure protection is not happening. The growth, even on a 2 and 3 year now, they need to do better. So I think the opportunity is very large. The models are right. The focus on profitability for the larger names we own, both of them have the right model, right franchisee. It will only get better for one of them as they get merged, the parent gets merged. And we believe that there is a clear opportunity. And the most importantly, they came back to reasonable valuation. So the valuation in insurance that you do on a DCF basis, on the VNB, net present value of the VNB and the EVE, that was coming reasonable. So on an absolute basis, when things get better, you do get comfort. And that's what we got comfort in buying both of them.
Sanjay, talking about comfort and valuation comfort and, stocks that did well, the two names that come to mind for me in 2022 is ITC and Coal India. And I've noticed that you've got it in Coal India earlier this year. Now, the stock has had a good run. Surprised everyone. Under-invested space is Coal India. What do you think about the stock from here on? For the time being, the street loves the fact that they're giving a big dividend.
Yeah, so, I remember last time me and Prashant had a session on PSUs. This was almost 18 months back. And, at that time, we did discuss that we are open to buying PSUs selectively. If, of course, the leadership is right, the executive leadership, they are focusing on the right things, and the government intervention is less. We cannot say, government intervention will never be there. But so this was one stock where we did feel that, the volume growth is coming. It is in sync with the need of the country. The valuation are absolutely, it's today also, if you take a 45,000 crore EBITDA with a 40,000 crore cash, is less than 3 times. Its dividend this year will be 30 rupees. And the volume growth will come through. So then it's a win-win situation. And the coal that they are selling today is at almost 80% discount to the imported coal price. So it's already been subsidized. So how more can be subsidized? So that was one reason we liked it, and we bought it right at the beginning. And we feel there is still room ahead. If you think in terms of volume growth ahead. And as I said, margins even from a small 50-55 million tons of e-auction. And then e-auction is also at a good discount to the imported price. And yet, if you are getting reasonable growth, that's good enough at this valuation. So that's the rationale we have bought into.
Sanjay, great conversation. Thank you very much for joining in. We need to slip into a very short break. But on the other side, we'll get you a check on what dealing rooms are saying in our segment D Street Chatter.
Well, unlike the last few days, in the final 30 minutes, actually the market is a little bit lower and we've not seen any big recovery. So it's a good time to go across. Nimesh has joined us. Well, Nimesh, what do you make of today's action? We're trading in the red. Maybe 10 minutes ago we were at the low point of the day, but still the flows are solid, or do you think they are, they're taking their leg off the axis?
The flows are solid. That's the feedback. On a day like this, when the Nifty intraday was down 80 points, to come out and say that there's going to be a large market at close buying flow at the leading FI desk, maybe it doesn't show up in the Nifty, but that's the overall feedback that there is market at close buying interest and that to a large flow in the Nifty basket at the leading FI desk. So that's the overall feedback. As far as flows are concerned. Again, day of consolidation, that's been the trend for the last many days. Again, 18,300 is acting as a very strong resistance on the upside. So that's playing out. And what we're seeing today is a lot of reactions to disappointing numbers. Fag end of the earnings season. And we normally see that, most of the earnings tend to disappoint. And that's playing out in many of the mid-cap and the small-cap indices. And that's why those indices are down sharply in today's trade. I guess the index which is doing very well, and that's well bid, is the PSU banks. That's where a lot of interest seems to be, not only from the HNI and retail investors, but from the larger institutions as well. So that's where the interest seems to be from the larger FIs as well. And again, that's a space which is relatively under-owned, so to speak, within the financial basket. Everybody used to own HDFC banks, LICs, and Kotex of the world. This is a space which was not well owned, and that's why you're seeing a bit of chase now in the PSU basket from the large institutions. The other big liquidity event to track this week would be the MSCI semi-index review. That's going to happen on the 11th morning, which is tomorrow late night. So Friday is when we'll get to react. I was reading a Morgan Stanley note which came a few days back, and their indication is they're assuming 8 stocks to get added. If all the 8 stocks get added to the MSCI, there will be an inflow of close to $1 billion. So that's something to watch out for, purely from a liquidity point of view. This Friday, so that's something to watch out. But again, day of consolidation, but the feedback is there is a large market at close basket buying at a leading FI desk.
All right, Nimesh, sticking your neck out there. So it's the screen may be showing red, but still you're saying that the flows will be rock solid. So let's focus on a couple of names, though. You already told us about the PSU banking index. What a star that's been. Valuation comfort, under-owned as well. But what other stocks are you tracking?
Okay, so in terms of individual stocks, the first stock on my radar today is Muthoot Finance. After a long time, I'm getting a sense of some interest back from larger FIs in this particular stock, and the volumes are on the higher side. So watch out for Muthoot. Purely from a delivery point of view, the interest seems to be back at an FI desk in Muthoot Finance. So that's the first one. The second stock is Bandhan Bank. Relatively, today the stock is up 2%, but the overall feedback is since the quarter two numbers, there is consistent selling in this particular stock from the larger FI. So even in today's trade, there is a large FI sell figure in Bandhan Bank. So the delivery volumes are high, but on the sell side, at least that's the feedback from the dealing room. So that's the second one. And the last stock is UPL. Again, post quarter two, you've seen a bit of consolidation in that stock. But, again, there is accumulation happening in this particular stock from the larger FIs. Most of the brokerages were upbeat on UPL post the numbers. And it looks like there is consistent buying from the larger FIs in UPL. And that's been the trend today as well.
UPL bucking the trend today. It's higher by close to about 1%. Nimesh, thank you very much for that. Let's invite Mitesh Thakkar back on the show to tell us what you can buy today and sell tomorrow for a reverse trade. Mitesh, what do you have for us?
Yeah. Buy on ITC or BTST on ITC is trading at the day's high. So people stop below 359 and a target of 366 for tomorrow. While on the other hand, a sell or STBT on Power Grid with a stop at 220 half for targets around 215, 214 for tomorrow.
Okay, all right, Mitesh, thank you very much for that. Now, Jubilant Food is the next one we're going to talk about. It's down sharply, some 7-8%, despite what was largely inline quarter. Mangalam is here with the reasons and what the street is making of the numbers. Mangalam, over to you.
Well, as far as Jubilant FoodWorks numbers are concerned, this quarter they were largely in line, but perhaps the street is fretting over what's taking place over the last 3 years and what is likely over the next year or so. Why do I say that? Well, because if you just take a look at this quarter, we've seen the revenue as well as the EBITDA largely in line with expectations. In fact, most of the street had factored in gross margin contraction as well, and that's primarily on account of the inflation that we've seen in cheese and vegetables. The net profit of the company, while it was optically below street expectations, that's primarily because of a higher depreciation, and that's because the company is expanding their stores, and that's where they've expanded 76 Domino's stores in the second quarter, and this is much higher than the street expectations. And they believe that going forward, they will in this year itself add around 250 odd stores. In the first half, they've done a little over 130. non-Domino's. That's where the problem is, because in Popeyes, which is supposed to be a growth driver for the company, they're planning to launch only 20 to 30 stores this year. And secondly, for the other verticals that they had drawn up, the Chinese business as well as the biryani business, they will take a pause, take a look at the unit economics before, making a call on the strategy on that one from the next financial year. And that is what brokerages are concerned about. ICICI Securities, for instance, says that over the last few years, revenues have grown by only on account of network expansion, and average revenue per store remains the same. Secondly, the management bandwidth has been utilized in these extension of brands with subpar performance so far. So these are a couple of things they'll want some improvement on. Jefferies as well says that the last 3-year revenue CAGR has just been about 9%, which is unimpressive. And the entire benefit of price hikes also hasn't flown through into their P&L. And that's primarily because consumers are down trading and not, looking at premium products out there. So that may impact their margins, which is why they've trimmed their EPS estimates as well. So those are a couple of factors that may be spooking the street today.
And the valuations at 57 times forward multiple also do not help. Thank you very much, Mangalam, for highlighting that. Let's invite Sudeep Bandyopadhyay of IndiTrade Capital on the show now. Sudeep, first thoughts on Jubilant FoodWorks?
Well, I think, you just concluded what is my first thought is that the valuation is at such a multiple that the margin of error is very, very limited, and everybody will examine your results and your progress and your future very, very closely. I think on that count, Jubilant, in spite of the decent set of numbers, hasn't done well. And I think the argument is absolutely valid that the new, the concept, the new stores, whether it's the Chinese or it's the biryani, that's not really picked up in spite of consuming a significant part of management bandwidth. Also, I think the expansion of Popeye isn't what it was being expected. So the future and the sustainability of the multiples is becoming a question mark. In any case, I think it was an extremely high multiple which the stock was enjoying. So, I have been kind of always a little cautious as far as Jubilant is concerned, and I'll remain cautious. I definitely don't want investors to go and start buying this.
Okay, be a little cautious on Jubilant. All right. Now, Tata Motors will be the big one, which will report numbers post-close. Sonia is here to tell us what we can expect from Tata Motors. Sonia, over to you.
Well, it's expected to be a good set of numbers for Tata Motors this quarter. The revenue growth is expected to be in excess of 30-odd%. The EBITDA will more than double this time on a year-on-year basis, while the margins will improve to 10.2% versus 6.6% same time last year. Not just that, the company will report a profit this time around versus a loss same time last year. Now, there's a good improvement that we've seen in the Jaguar Land Rover business. There's an improvement in the semiconductor supplies as well, and the company comes off a low base, because of which the numbers are expected to look quite good. Not just that, both in JLR and in the India business, things have improved both quarter-on-quarter and year-on-year. The JLR volumes are up 30% year-on-year, coming in at 102,000 units, while it's a very strong growth that we've seen in the India business passenger vehicle volumes, which have gone up 70% year-on-year. The commercial vehicle business has also seen a good growth to 101,000 units. Not just that, the India business margins are expected to improve because of operating leverages as well as the price hikes undertaken, and even the JLR business margins will definitely improve because of a low base as well as a better geographical mix, with more number of units being sold in China in this quarter. So all in all, good set of numbers expected from Tata Motors.
Expecting a good set, Sonia. We got that. All right, let's welcome Sudeep Bandyopadhyay as well. Hi, Sudeep. Thanks so much for joining in. What do you do with the auto space, and in particular, what about Tata Motors? I recall the stock was at around 550 earlier this year. It's corrected close to 20%. I think the problem now is the global exposure. The fear is that things will slow down. How do you view the stock at these levels?
Absolutely right, Nigel. I think they have done many things right. The domestic business is back on track and an excellent manner. The EV business, I think, is beating everybody at this stage. Their EVs are on the market and the feedback is good. The JLR numbers are good. So pretty much everything, as Sonia was mentioning, I think this quarter, which results they will announce, definitely look good. But the question mark is on the future. And the big question is what's going to happen in China. with whatever reports we are getting and whatever we are hearing, I think, and the German car makers are already taking precaution, and they are expecting a big slowdown as far as luxury car consumption in China is concerned. Also, JLR has a large business coming out of Europe, and we know Europe is getting into a economic recession kind of a situation. So under these circumstances, the sustainability and growth of JLR numbers in the coming couple of quarters at least is a big question mark. So under these circumstances, in spite of good results and in spite of good domestic performance, I think I will again remain cautious on Tata Motors at this stage.
The other big number to track today will be Lupin. Ekta is here to walk us through the expectations. Ekta.
Thanks for that. Well, for Lupin this quarter, we are expecting a flat performance on the revenue. So that's expected to come in a little over 4,000 odd crores. Margins should probably decelerate on a year-on-year basis to 10.7% versus 13.6% and a profit of around 170 odd crores. But a Q-on-Q improvement in the margins is what the street would watch out for, as well as a revenue improvement sequentially. Now, margins should improve versus the 6% that they had reported last quarter, which is a complete disappointment. Plus, there was a loss last quarter as well, and hence there is expected to be a Q-on-Q recovery. Now, US sales, remember, last quarter disappointed, so that came in at around $120 odd million. Street was anticipating $170 to $180 million. So this quarter, the street is anticipating at least $150 to $155 million in terms of US sales, and that is expected to be led due to the launch of a particular bowel drug, Suprep bowel kit, easing of the inventory pressures that they face, the price pressures that they face, albuterol inhaler, one of their key drugs. Their market share should be maintained at around 15% odd. Plus, the company should probably maintain some amount of market share in Bruvana generic, which is also an inhaler, one of their key drugs in the market. Now, the quarterly improvement in the margins is expected to be led by the US business, plus cost cutting, which the company had indicated of around 500 crores in the next couple of quarters. The guidance eventually is to move to double-digit margins. So the guidance will be watched out for US market recovery as well as India growth sales ex of COVID-19. They did not have much of a COVID-19 portfolio, but nonetheless, growth in India will be something that the street would watch. Commentary will be very important considering their biotech facility in Pune received 18 observations, and they've also been issued a warning letter for one of their facilities recently.
All right, Ekta, thank you very much for that. So Lupin and Tata Motors both will be in focus when we come back tomorrow. You got what, 50 points back again. The market had recovered sharply around the time that we were speaking with Nimesh. But there's another leg down which has materialized. Maybe look at the bank Nifty as well. Yeah, I mean, it saw a bit of a pop, and now that has also disappeared. 0.25% on the Nifty bank. Market breadth, NSE advanced decline ratio is exactly almost fully 1:1. So that tells you a story as well. Sudeep, you want to comment on Lupin or any of the other big, very large moves, right? Earnings related. The Path Lab companies like Lal Path Labs, Metropolis. There was, the tire company MRF, Indigo, which did not react on Monday, was flat, but is reacting today. Numbers came last Friday. There is Godrej Properties. Ramco reported earlier. Anything you want to pick from these?
Well, Prashant, a couple of things I'll pick from this. One is as far as the Path Lab companies are concerned, my belief for quite some time has been that the margins will start deteriorating. Whether we see it in this particular quarter when they're declaring results or not, it's bound to happen. A lot of new players, as we all know, have come and are coming in this. The entry barrier is very, very limited. And some of these new entrants have got significant muscle power, whether it's a Tata 1mg or it's a Lupin or even the other players who are talking about coming into it. So margins will be under pressure, and we'll have to watch this space very, very carefully. There is absolutely no point going and buying these lab companies at this stage. As far as pharma is concerned, our belief has been that one needs to focus on domestic business for the time being. US business, pretty much of all the pharma companies has been under pressure. The pricing pressure in US is here to stay. In Sun Pharma results, we did see some amount of easing, but that's company specific. We don't believe that that's going to be the trend. So of course we'll watch for the Lupin commentary and Lupin results. But domestic business is what should drive pharma in the near future, maybe next few quarters at least. So I think these are the important things which I will watch. As far as some of these other companies you talked about, particularly tire, I think it's a mixed bag. We saw CEAT coming out with good margin expansion, good numbers, whereas MRF, it's just the opposite. So overall, I think one has to be extremely company specific as far as tire space is concerned, because some of them have been able to pass on the margin, do better cost cutting. Some of them haven't been able to do that. So we need to watch company wise and take call.
All right, fair enough. Look at Piramal Pharma. You're talking about pharma. I think it came into life as a separate entity at about just under 200, at 150 now. Piramal 160, 157 or so on Piramal Pharma. So that's not done too well since it's listed separately. We'll take a break here. There is 7 minutes to go for market closing. See you on the other side. Sudeep, of course, is with us. More market conversation in just a bit.
What is the current status of our cyber robbery?
Little bit playing tricks.
Alluring them a little bit.
Tempting them a little bit.
After that, their all money will be ours.
Our little awareness can stop their laughter and cunning tricks. Do not use unauthorized apps, unknown links, and don't allow unsecured Wi-Fi connections. If something wrong happens, report the matter immediately on helpline numbers.
आग को फैलने से रोकना मुश्किल है, पर नामुमकिन नहीं। अब फायरवॉल टेक्नोलॉजी के साथ सेंचुरी प्लाई क्लब प्राइम आग से बचाए।
This festival, bring in Nissan Magnite, big on dreams, bold in passion, beautiful in every drive. Rush to the nearest Nissan dealership now.
To make my vision a reality, I have to see clearly from every point of view. With my Verilux progressive lenses, I seamlessly transition from near to far and see every detail in sharp focus. When you see no limits, there are no limits. Verilux lenses by Essilor.
2 साल में रेट रॉकेट 100%।
क्या भाई साहब, get सही price trends at 99acres.com. घर लेना हो या बेचना, एक्सपर्ट से ही पूछना। 99acres.com.
सुन, इक्विटी में इन्वेस्ट कर, ग्रोथ का है चांस। सुन, डेट में है लो रिस्क, बात मेरी मान।
अरे बेटा सुन, गोल्ड सिर्फ गोल्ड, भैया ने भी यही किया।
सुन, अब तू कंफ्यूज मत कर यार। अरे मतलब सुन, सबकी कर मल्टी मतलब मल्टी एसेट एलोकेशन फंड, यानी 3-in-1 फंड। ये इक्विटी, डेट, गोल्ड तीनों में एक साथ इन्वेस्ट करें। म्यूचुअल फंड निवेश बाजार जोखिमों के अधीन है। योजना से जुड़े सभी दस्तावेज ध्यानपूर्वक पढ़ें।
How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com.
Who said the markets can't be exciting? Who? Get the lowdown on the yays and mays. Straight from the top, catch market feels and news reels. Number crunch for the best of the bunch. The bigger Q for the richer you. Hot trends, big noise, what's viral and what's out. We'll give you the market goals you need to stay ahead. Mad about markets at these times.
Welcome back. 3 minutes to go for close, a little over 3 minutes. Sudeep, it's a pleasure. Thank you very much for joining us with all of that perspective. Always appreciated. So the move came as we were talking about, but only that it was on the lower side. 70 points lower is what the Nifty is going to go home with. Banks end higher. The Nifty Bank, PSU banks, of course, outsized performance once again. It's just sort of so far we've had 2 trading sessions this week, and the PSU bank index is already up over 7%. So that kind of tells you what happened. Very kind of scattered type of performance. So on the Nifty, you had Adani Ports, which did very well, Coal India, which did well, and ITC, which stood out as well. Those are the 2% kind of gainers. On the lower side, Hindalco lost out, Power Grid was down, Divi's Laboratories was down sharply, and there was Tech Mahindra, which lost out as well. And I think, outside of the Nifty, the amount of outsized moves, both higher and lower, I think was the real story, especially some of these earnings-related moves, which we saw and we've been tracking. Rima.
Absolutely, and even names where the earnings prima facie didn't look very bad. Take a look at Barbecue Nation. It came out with numbers today. There was a revenue growth of 30%. Margins were maintained, in fact, went up 10 basis points. There was a profit of 7 crore versus about 3 crore, but the stock ended down close to about 7%. So despite seemingly pretty decent numbers. But let me quickly run you through some of the big earnings reaction. On the way down, MRF down 9%, Jubilant FoodWorks, high valuations weighing, otherwise numbers in line. Godrej Properties sulked 7.5%. You had weakness coming through for Birla Corp, Ramco Cement. These were a few names under pressure. Orient Cement too, reporting numbers. Stock was down close to about 4%. Keep your eye on that. On the gaining side, you had PI Industry. That was clearly the star today. Very large volumes. SEAT, Bosch on the auto side, auto ancillary side, and BLS, a play on pent-up travel demand. They provide the outsourcing visa services. BLS, good numbers, and their 1:1 bonus issue fueling up the stock in trade, Nigel.
Well, that's right. A few more gainers, Rima, I'll just put up for our viewers on the screen. You have KPI Green. The stock was up more than 10%. You had Sarvodaya SFB. We don't talk about the stock very often. It was up close to around 9% odd. Rushil Decor as well. That's another name that came on my list. That as well was up 10%. Remember, these are stocks that we're talking about that were up, and they were up on very, very large volumes. Igarashi Motors as well, I think, is reacting to its number. Stock up close to around 8%. Max Life was a stock that did pretty well. That one as well did end with solid gains. So though, in fact, the headline index was under pressure, you had select mid-cap names as well that were lower, but there were quite a few gainers. Case in point being a Polycap, Poly Medicare actually, beg your pardon, came out of the good set of numbers. Management is sounding very optimistic about things improving from year on, particularly on the margin aspect. And Poly Medicare, well, that stock as well was flying away in trade today. So to sum things down, well, we end closer to around that 18,100 odd mark, though because of averaging, I see us closing at around 18,150 odd. At the start, you would have thought we would end it closer to around 18,300. However, from the highs of the day, both on the Nifty Bank, we did come off the day's top. Well, we'll slip into a short break, but on the other side, we'll run you through a few stocks that are in focus, as well as get you a couple of previews.
Welcome back. It turned out to be another session of consolidation for our markets. For the last 6 trading sessions, the Nifty has been trading in a band of about 18,000, 18,200, 18,300. And today as well, we saw a bit of volatility in the last 30 minutes, but finally ending with a cut of about 0.25% on the Nifty, taking it to 18,150. Well, the mid-caps lagged quite a bit. The mid-cap index down 0.75 of a percentage point, with the advanced decline ratio in favor of the losing side. But let's drill it down to individual names. Dr. Lal Path Labs was under pressure after margin contracts and brokerages gave it a cautious outlook. Earlier today, we had a chat with the CEO of Dr. Lal Path Labs to understand how the company would fare going ahead. Listen in.
We do believe that, pre-COVID margin levels of 25-26%, normalized EBITDA margins are what we are really, keen to achieve in spite of all the pressures which come into the business. So that is something which we are constantly working towards, on a longer term basis. And that is what we feel comfortable with. We have been tracking competitive pricing, and what we understand is that a lot of them were introductory or promotion prices, which are now slowly being withdrawn or moved upwards. We have seen evidence that the package prices or the one-off test prices, which were at a deep discount, are slowly being inched up to what we believe will be sustainable pricing for all the players. This industry has a very high gross margin contribution the way we look at it, but also a very heavy, what I would call fixed cost structure. So it is not really possible to keep offering very, very low prices without fundamentally altering the value chain of this business. In the absence of any value chain, all the promotional pricing will obviously move out over a period of time, and which is what we really are witnessing at this point of time.
All right. So that's Dr. Lal Path Labs, corrected quite a bit. Now, PB Fintech was higher in trade, although it did fizzle out towards the end after the company posted a decent set of second quarter earnings. Even amongst the new age companies, PB Fintech, of course, is one of the worst performers. Revenues for the quarter, though, doubled and losses have contracted this quarter. Earlier, my colleague Yash Jain caught up with the co-founders of the company on the outlook going forward. Listen in.
The total burn on the new initiatives going forward will be under 200 crores a year. And if you notice in Q4 this year, so what was our objective with the new initiatives, which is mainly the POSP business? Our objective was to become the market leader, which we started in July, and by December, we were the market leader. Once we became the market leader, we started moving towards the direction of cost optimization. So I think the peak cost was in the fourth quarter of last year, when the new initiatives lost about 91 crores in the quarter, down to about 65 in the last quarter. And by the last quarter of this year, I think we should be down to about 30 to 35 crores. But there is no urgency in trying to break even on that business. So in Q4, we will be adjusted EBITDA positive. And it's very straightforward, right? If you look at the adjusted EBITDA, there are two ingredients there. One is the core business, one is the new initiative. The core business made 12 crores of profit. The new initiative lost 65 crores. All that's happening in the next 2 quarters, the core business will make 50 crores and the new initiative will lose 35 crores. It will be positive. It's really that simple, right? There's no change in our business. You have a guaranteed profit of about 250, 300 crores sitting there 2 years later. I have sold what I had to sell. Okay, so I am done. I don't, that's basically it. So I think it takes people time to understand the core strength of a business, and they get digressed by a lot of fluff around it. The fluff is, did Yashish sell his stake? Are investors going to sell their stake? Is the new initiatives, when will they break even?
Okay, and now turning our attention to the earnings for tomorrow. Bata will be reporting Q2 numbers. Mangalam is here to tell us what we can expect. Mangalam?
In the footwear space, after Campus and Metro's listing, Bata has actually been quite an underperformer. It's down about 20% from its 52-week high as well. But this time around, it's a good set which the street is expecting, and that's primarily on account of a low base. Now, as we speak, people are back to school, back to offices, back to social events, and also back to buying a lot of comfort footwear, which is actually margin accretive for Bata itself. Revenue growth largely expected to be led by price hikes that the company has taken, and also as a result of that, the EBITDA will jump on a high base. What's the street working with this time around for Bata? 28.5% in terms of a top line growth. You're looking at a number just shy of that 800 crore mark, and the EBITDA margins actually jumped by almost 600 basis points. That means an EBITDA growth of 68%, and the net profit grows almost 140%. The number you're looking at the bottom line is 90 crores versus 37 odd crores. Important to watch out for growth outlook in the second half, and that's primarily because the third quarter for the company is among their largest quarters. Raw material trajectory and store expansion is something that we'll be eyeing closely as well.
All right, Bata, very, very important to track. But, let's move away from earnings to something which, of course, will occupy a lot of mind space on Friday, which is polling for the State Assembly in Himachal Pradesh. This is, of course, one of the first completely COVID restriction-free elections which are happening, state elections which are happening, and it will be kind of a prelude to many other state elections which will happen next year. My colleague Santhya was on the ground in Himachal highlighting issues which could play out in the election. In December 2003, the NDA government abolished the old pension scheme, replacing it with National Pension Scheme in April 2004. This has not gone down well with the people of the state, especially retired government employees. Santhya gets us this report in terms of how this issue is making its way through this election in Himachal.
This is 62-year-old Haridas's tea and Maggie stall in Kufri, one he started soon after retiring as a peon at Thiok's Government Boys Senior Secondary School, where he worked for 24 years. But this wasn't his original retirement plan. He blames his return to a hard life on the central government's decision to abolish the old pension scheme and replace it with the National Pension Scheme. His last drawn salary was 25,000 rupees a month, and under the old pension scheme, he would have received half of that as pension, around 12,500 rupees a month. Under the NPS, state government employees contribute 10% of their salary to their pension fund. The state contributes an equivalent amount. This money is then invested in earmarked investment schemes, and the returns on this will determine the pension payable.
ये इसलिए नहीं हो पाया जी, जब हम रिटायर हुए तो मेरे को 1301 रुपए पेंशन मिल रही है, तो इसलिए अब गुजारा नहीं हो रहा है, ना चाय पीने को मिलती है, ना खाना खाने को मिलता है, तो 1300 रुपए से ना सिलेंडर भरता है, एक पौच तेल खाता है, अब कैसे होगा मैम जी?
Haridas is not an isolated example. There are at least 3 lakh government employees like Haridas in Himachal Pradesh who are demanding the restoration of old pension scheme. And considering their strength, they have the power to impact the election results by a huge margin. And these government employees, whether they are retired or currently serving, they are clear on one thing, that only those who will restore the old pension scheme for them is going to get their votes.
तो कांग्रेस सरकार बोल रही है कि हम जो है क्या नाम ओपीएस आपको जो है वो जिसी वक्त सत्ता में आएंगे उसी वक्त पहली कैबिनेट में आपका जो है वो ओपीएस हाल करेंगे, ये आश्वासन दिया है, तो इसलिए हम सोचते हैं कि हम अपना वोट जो है वो कांग्रेस को ही दें.
For the ruling BJP, this is a catch-22 situation. The old pension scheme was abolished by the NDA government in 2003, and bringing it back in the state will prove awkward. But with elections drawing closer, the state leadership is taking the issue seriously.
उम्मीद है कि ओपीएस वापस आ सकती है हिमाचल?
मैं ये कह रहा हूँ कि ओपीएस आए, चाहे ओपीएस का इसका कोई एक सॉल्यूशन कोई निकले, कोई रास्ता निकला है, और वो निकलेगा तभी जब केंद्र सरकार इसमें आगे बढ़ करके मदद करेगी, और केंद्र में भाजपा की सरकार है.
The Congress has already bitten the bullet.
The biggest issue that the day Congress party is sworn into power, the first decision by the cabinet of the Congress government will be the restoration of OPS.
A restoration of the OPS will come with added cost for the state government. Experts estimate that it could result in a one-time expense of around 2,000 crore rupees and work out to a yearly recurring expenditure of over 700 crore rupees. And with government employees making up over 5% of the state's electorate, this demand cannot be swept under the carpet. In Himachal Pradesh, Santhya Gora.
All right, so that's the ground report from Himachal Pradesh. One of the issues, which is of course a big one, the restoration, the demand for restoration of the old pension scheme. We slip into a quick break here. We'll leave you with some market opinion that we got earlier in the day. Krishna Kumar Kara of MK Global, his thoughts on the market. Take that break, see you on the other side.
Optimism is at very strong, and we are almost as an index level, we are almost near the 52-week high. And this is obviously a function of robust corporate performance and robust government policy, which augurs well for the coming 3-5 years also. Now, trying to time the market is very, very difficult. We have seen that despite $22 billion worth of selling by FPIs over the last 11-12 months, our indices are back to its peak. In June, we were something like 15,000 odd, 15,500. From there, we have recovered. So I would imagine that it's better that investors focus on bottoms-up investing and stay invested from a medium-term perspective. Banking continues to remain robust, and from a next 2-year perspective, investors should at least get 15 to 20% compounded returns. But I think within that, if you look at your large private banks, if on a 1-year basis also have delivered almost like 15% returns. But it's the public sector banks which have delivered stellar returns of, say, almost 30 to 40%. And going forward also, whenever a sector is in tailwind, it is the tier 2, tier 3 participants who possibly will give superior returns. So aggressive investors should look to be investing in public sector banks or even tier 2, tier 3 private banks where possibly the returns could be much more stellar. Obviously, your auto ancillary sector continues to do well. So I think that's a sector which is getting into a good cycle. So whether it's passenger vehicles, whether it's commercial vehicles and the tractors, all the three segments should give good returns to investors. So that's one segment. Overall, I think apart from the financial services sector, I think this the manufacturing sector per se, which is almost like 55% of the market cap. That sector from a 4 to 5 year perspective seems to be in a sweet spot. The various government schemes and the capex cycles picking up. So there I would classify companies right from auto ancillaries, engineering companies, specialty chemicals, pharmaceutical companies.
Welcome back, and let's chat cryptos now because they have been in news for the last 3 days, but the decline just about continues today as well. If you look at the cryptocurrency markets today, we have the Bitcoin, which is trading nearly 8% on the weaker side. You have Ethereum down 16%, but the major of decline clearly comes in from Solana, 36% down even as we speak. And this is happening after Binance is looking to take stake or buy over in FTX. But there's a lot of ifs and buts in all of that. Let's discuss that. For that, we have with us Kashif Raza, who's co-founder of Crypto Qanun. He joins us on the show live. Kashif, hi, and difficult time yet again. Just as you were thinking that the crypto winter is over, you have yet another big news coming in with two major exchanges of the world. The kind of statements that are coming in clearly have had an impact on all cryptocurrencies.
Yeah, definitely. The kind of event that has happened in the past 48 hours has really shaken the market. And the kind of, in fact, these events are being said that to be the most, I can say when the history will be seen, in future when people will look back, probably this event is one of the most important events that has happened. Because understand that two biggest exchanges of the industry, and they were, fighting. So initially, people were thinking that they're fighting with each other, and Binance is trying to take down, FTX. But then later on, we figured out that Binance actually helped FTX bail out from this situation, and they've taken over it, they've bought it. I think this news has a lot of implication. The way it has happened, the way FTX has fallen down, the fallout of FTX has raised a lot of questions.
Right.
And in future, many new things will come up.
Surely. Kashif, there also, and much of the drama nowadays happens on Twitter, and there is a statement from Binance's founder saying that the deal is pending due diligence. I mean, this comes in after a lot of conversation already has happened, and this is not the first time that we are seeing something like this from Binance. I mean, we've seen that in the Indian markets with WazirX as well.
Yeah, we had seen it in the past that in 2018, Binance said that they had acquired WazirX, but in 2022, they denied it. And that was quite a shocking news for everybody. And then we saw, arguments that were happening publicly between Binance and WazirX. And we all saw that. And I think what is the main problem in this industry right now is that this industry is highly unregulated. There are no clear guidelines and there are no clear regulations. If you see, Binance is, nobody knows that where Binance is based at and where their real offices are, where the real people are going, where it is filing the returns, where it is reporting their returns. So nothing much is clear. And same goes for FTX, right? So what is happening is, the fallout of FTX has happened because somewhere they were not reporting the books of account on a regular basis to a particular regulator.
Okay.
So once the balance sheet came out in the media and once the numbers were out in the public, then public got, an understanding that books are really not in a nice condition. The balance sheet is showing something else. And on a macro level, on Twitter, on media, the things are different, and on balance sheet things are different.
So absolutely. So Kashif, what is Binance then buying FTX into? Because when you look at the last 3 days, and this is all media reported reports, that FTX has recorded a withdrawal of $6 billion in last 3 trading sessions there. What does that mean for the overall crypto markets, one? And if it's in such a mess in the global markets, and you get to read most of this stuff on Twitter, what does it do for the investing community?
Yeah, first of all, it is not easy for Binance to take over FTX for a couple of reasons. In FTX, there are many investors that have admitted on Twitter that they are not aware of it. And by the way, they are very reputed venture capitalists, those who are invested in FTX. And they are saying that they are not aware of the situation. Whatever information they have, they are getting it through Twitter, number one. Number two, the books of accounts of FTX are in a real bad situation. Why? Because if FTX has an assets of $14 billion US, $6 billion US is only FTT token, which is now down by say 99% from its all-time high.
Right.
It's hovering at around $4-5 from an all-time high of $80 So the value of FTT is nothing. And in fact, the other assets on the balance sheets were different cryptos like Solanas and other altcoins.
Right.
And those altcoins are also not doing well because they are also bleeding right now. So the overall asset side of the balance sheet has gone for a toss, and the liabilities they stay there only because the liabilities are close to $7 to $8 billion US. So it is yet to be seen that what Binance is taking over, by the way, and if they are buying the assets, what assets? Because the assets are not there. So it is very difficult. So the moment they said that they are doing a due diligence, market and the investors didn't took this news as a positive thing, because what Binance is buying, because nothing is clear. And also the news is that the regulators around the world, especially US, they are watching this deal, and probably they are watching it very closely, and all these developments probably is opening a new gate and a new reason for the regulators to go, all out against crypto.
Crypto yet again, yes. I have one final question, and this is about the kind of liquidation that we've seen in the global markets. 700 million liquidated in longs in last 24 hours, and much of that clearly is Bitcoin, Ethereum, and Solana, which has seen $40 million of a liquidation as well. Now, liquidation happens when the exchanges cut your positions because you can't pay margins, and the kind of sell-off that we've seen into this market, how soon do you see some stability coming back here? How long do you see these being stretched and the impact on the prices?
Not very soon. I think this event has triggered a lot of debate. Now, what will happen? All the different exchanges, will be under scanner. And other than Binance, there are a lot of exchanges like OKX, KuCoin, and there are many exchanges, Huobi. All these exchanges have said that they will release a proof of reserve, because now people are asking questions to their exchanges that what is the guarantee that you also have the reserve, or you are not in a similar situation like FTX. So many exchanges know that the trust has taken a toss. People are asking questions to their exchanges. Exchanges will provide the proof of reserves, and those exchanges who will not be able to provide that will definitely see a shift happening from them to the competitor, number one. Number two, you will also see, the exchanges with their native tokens will be under scanner.
Right.
Number three, you will also see the founder of a particular exchange. Like in this case, FTX was invested in Solanas and other altcoins. So once the founder, investor has gone down, ultimately the investments in the other projects will also has taken a toss. So a lot of questions and a lot of negativity is there, and already the bearish market and the macro sentiments are already on the lower side. Probably it will take a lot of time to come out of this situation.
All right, does not sound good at all, especially when it is two top exchanges, crypto exchanges in the world talking like that, and especially on Twitter, where the promoters and the supporters say that they are not aware of the deal going through, is something that doesn't really work well, and we have seen that sell-off come into the markets. Kashif, as always, thank you so much for joining us. But before we go, let's put those numbers of Tata Motors second quarter earnings on your screen there, and there's a net loss really at 944 crores, while we had a poll suggesting that 248 crores of a profit is what the markets were looking at. So this clearly has surprised on the other side. Revenue on the other side at 79,000 crores versus CNBC-TV18 poll of 81,000 crores also is coming on the weaker side. Margin as well has disappointed at 7%. We put out a poll saying 10.2% on that. EBITDA at 5,572 crores versus our poll of 8,330 crores also is coming on the weaker side. So none of those numbers really matching, and that's a surprise on the weaker side coming in from Tata Motors. But more on those numbers, and we'll have Sonia as well joining in on the other side of this very short break.